I'm pretty sure that we're going to see a shift by the end of the year, meaning a weaker stock market that's notable, not a crisis, not a collapse, but a notable shift, that not as much, on balance volume, cash flow moving into the stock market. And we'll see that on balance volume, that cash, that investment cash moving into oil, energy, and the metals. So I think the shift has started. I really do.
This week's specials with Miles Franklin Precious Metal Investments. 2022 Gold Britannias for only $79 over spot, and 2022 Silver Britannias for only $369 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan, the silver guru from the Morgan Report. David, thank you so much for joining us today.
Elijah, thanks for having me back. And in a bit of a festive mood, I thought I'd be a little bit funny today. So I've got my, if you can read it, got silver ? Mark shirt from Arcadia Economics. So thank you.
Fantastic. I love it. So the big question here is who's got silver, right? And for whoever has silver today, a pretty good day. We're seeing silver jump back above $23 as we record this on October 13th. That is Wednesday. Your perspective on what we're seeing in the markets right now?
Specifically to silver, and pretty much gold is in the same situation, we're in the doldrums right now. I mean, even with today's move, which is, rather significant and probably made some silver bulls somewhat happy, we had, a lot of pain in the silver market for a lot of years. And as I've said on another recent interview that, we were below $20 level for like 8 years. And once we got above it in kind of a, rather significant way in a fairly short duration of time once it breached the $20 level. And we went up to the 28 level or so. And from the beginning of this year, there was a lot of enthusiasm around the silver market because this is when the Wall Street silver crowd started with the Reddit subgroup. And there was just a lot of enthusiasm and a lot of silver purchased at the 28, 27, level on the spot market. And that was relating to very high premiums. So a lot of silver changed hands at 31, 32, 33, 34, 35. I mean, sometimes the U.S. Coinage was up, depending on the dealer in the day, $6, $7, maybe even $8 sometimes. So that carried through like February, March, April. I forget when it started down. Premiums came off a little bit and then went back up. Point I'm making is that 23 doesn't sound very good for those people that bought it at, paid 30 or 33 for it. Okay. So that's point number one. You can look at it the other way, which I do because I'm a long-term investor and I've been buying, all the way along. And 23 looks pretty good from the aspect of we're not at 18 anymore. But certainly I think it should be, this point in time, I think it should be well over 30. It's not. And before you ask me, I did say at the beginning of the year, especially with the amount of volume and enthusiasm we saw at 28 on the futures market, that 30 was pretty achievable by the end of this year. And now I'm not so sure. I mean, we'd have to have a $7 or $8 move. And if anything could do it, silver can. I'll clearly state that. But the rest of the markets, I think we're getting a shift. First of all, one more comment on the silver and gold market, and I'll include gold on this. We're climbing the wall of worry. This is a bull market. A bull market fakes out a lot of people, a lot of ardent bulls that will, get in at a certain point in time, expect the market to go up the day after they purchase, because after all, they just purchase and they know it's going up. So why does it go up the next day and from then on? It's unrealistic. But you get this back and fill and this kind of I'll give up and doing nothing, and all the other markets are rocking and rolling. You hear everything about the other markets on the mainstream financial press about, cryptocurrency or the S&P 500 or Tesla stock or, whatever. And all those are valid and they're all true, but this is part of the process. And the process is to have a position that you need, have more if you want to, weight more heavily into the precious metals, and be patient. So I think we're at the point now, having said that, where we're going to see a shift. And the shift is what's going on in the bond market in the last auction, where a lot of foreign investors said, we really don't want your U.S. currency. Not as much, a very not well-received offering. And then on top of that, the stock market's showing signs of a top. I know I've said it before. It's very difficult in a market that's driven by algorithms. And I'm not trying to make excuses. I'm just trying to be gut honest. It's really hard to analyze a market, even with good technical work and fundamental knowledge, what a market's going to do when you have infinite money to back it up via the Working Group on Financial Markets, better known as the Plunge Protection Team, and you have algorithms that tell you when you've got to shoot in more cash and buy a lot of, near month to far month dated S&P futures to prop up the market, because that's leverage on top of leverage on top of leverage, which works, at least for a while. So we are at a point now where there's a shift. I think there is starting to be the cognition of, you know what, I think the stock market's gone far enough and long enough and high enough and isn't really showing us reality at all. Look at what's going on in the small business community, what's going on in commercial real estate, what's going on with people's paychecks, what's going on with mandates, this and mandate that. So I think that's really starting to seep into the overly optimistic S&P futures, which is a guideline for the general stock market on the U.S. side. So I think we could see, in fact, I'll say more than think, I'm pretty sure, and of course I'll get my head handed to me if I'm wrong, I'm pretty sure that we're going to see a shift by the end of the year, meaning a weaker stock market that's notable, not a crisis, not a collapse, but a notable shift, that not as much, on balance volume, cash flow moving into the stock market. And we'll see that on balance volume, that cash, that investment cash moving into oil, energy, and the metals. So I think the shift has started. I really do.
Speaking of the shift that you're expecting to see, another shift that we have been seeing, and I know our, Miles Franklin's president and CEO, Andy Schectman, has been talking about, is the wealthy are starting to move into precious metals. And, he's receiving a lot of huge orders from clients for physical precious metals. Your perspective on that, is that kind of part of the shift that we're seeing and you're talking about?
Oh, yeah. And I've experienced myself. In fact, smart money. I mean, I don't want to degrade anyone, but, a lot of the silverbacks are buying at the $28 level. There's nothing wrong with that. I think longer term, you're going to be happy. But when we hit that bottom temporarily in March of 2020, and we hit that $12 print on the futures exchange, you weren't trading much physical at that point, let me tell you. But regardless, I had more consultations for very heavy hitters than I'd ever had in any time frame before. And I had some in the 2008 financial crisis. And these were the type of calls that were, I've never bought gold before. I don't want to make a mistake. I'm willing to pay you your fee to help me out. Who do I buy it from and what do I do with it? Do I store it or what do I do? And, one or two of those occasionally, but no, it was several. And so I'll just back Andy up with that. Right now, the market for me, based on new subscriptions, is flat. Everyone's waiting. Everyone's waiting for a lower price if they want to buy more. And the technicians are waiting for a higher price to make sure the momentum's there before they get on board. So we continue to go sideways, which is fine. I mean, it's boring. It's upsetting in a way, but it's part of the process again.
You mentioned how there's also a shift out of the stock market, and it looks like we might be rolling over in the stock market. What are some of the indications that are telling you that?
Well, number one, it's the pattern. It's a distribution pattern. It's the insider selling. It's some of the SEC reports that you get privy to. I mean, anyone can look them up. It's public knowledge. If there's someone that's holding more than 5% of a company and offs a bunch of stock, they have to report it. Of course, it's not the day they do it, But the insiders have been selling into the weaker hands for a long time. So they've been distributing their stock. Again, it's on balance volume, which is the late Granville's technical indicator. I don't use too many. That's one that's pretty good. What that tells you is of the cash going into a stock or a commodity is and a lot of volume. Is it going up or is it going down? So if you see a lot of cash going into something, that's called accumulation and it's driving the price higher. If you see a lot of cash coming out and it's going into weaker hands, that's distribution and that's negative. So overall, we've seen distribution. I think that the smart money is definitely handing it off to weaker hands. And it's over leveraged. I mean, everything's over leveraged today, Elijah, as you know. But I mean, stock market, the margin debt, the amount of people that are still convinced the stock's only go up, the sentiment indicator, the volatility is not where it should be. I think every indicator I can think of is telling me as a contrarian that we are pretty close to top. I do have to add kind of talking out of both sides of my mouth, you might say that, I was more ardent on the idea that we have, too high of a stock market. It's going to correct substantially at some point. I've lightened up on that because in a true inflationary environment, you could just keep adding to the stock market, especially if the algorithms are set up and the Fed's willingness to support it. That like Venezuela or Zimbabwe or Argentina or any of these places that go into a hyperinflationary depression, that the only way to try and save, not the only way, but one way that most people have to save their savings is to go into the stock market. Very evident in the Weimar Republic. If you study it, there was a gentleman that did it, and I borrowed his, gave him credit, of course, just some pretty fine charts on that years ago. So I do want to give that caveat. I don't think that'll be the case. I think the market will correct to more moderate levels and more realistic levels, but I can't rule out that the powers that be just continue to lift the market higher, which is really a shame in a way. I mean, because at that point you lose trust in the currency altogether. It doesn't matter what stock you hold, pretty much, what's it worth, and it'll ebb and flow. But the dollar doesn't end at a zero. It ends going toward zero. And when the panic buying begins, and I think, I don't want to use that word right now, but the shift in thinking about what's valuable is shifting. Bonds really aren't that valuable, although they had a move versus the stock market, because the stock market is showing weakness. So, the only thing that runs the economy is energy. Nothing runs the economy but energy. So if you've got $80 a barrel oil and it is moving to 100, then that affects the price of everything. Transportation of it, production of it, fertilization of foodstuffs, everything revolves around that key. And yet it only makes up, 2.5% of the S&P 500? It should make up like 50% of it. I mean, if you get it into fundamental thinking, where energy touches every good commodity and service that's available to mankind, how valuable is it? Well, it's infinitely valuable in a way. I mean, I'm speaking philosophically, not what a price of a barrel of oil should be, but it's underpriced relative to what it is worth in the economy. And I think that's going to cause a rebalancing of the prices that we see for everything across the board in the financial markets. And again, I'm just going to say it one more time. Energy, metals higher, commodities higher, things we need higher, things we don't need lower, things that are in excess lower, and a lot of these overvalued or overpriced stocks lower.
I know investor Rick Rule has often talked about how, right now people are only about 0.5% invested in precious metal related sectors, but historically it's more like 1.5% or higher. So your perspective on that, if we do see this shift, what kind of impact is that going to have on the price?
Huge. I mean, you could use Rick's right. I mean, I don't know where he gets his number, but I know where I get mine, and it's maybe a little higher than his, but the idea is absolutely correct. So just thinking about anything that you want to buy, but we'll just use a stock, XYZ stock. If there's twice as much demand, what happens to the price? If there's 3 times as much demand, what happens to the price? I mean, look what happened to the silver market from, January, February till June, July. I mean, there was such demand that people were waiting 6-8 weeks and paying, very large premiums above what the normal is. And they're willing to do it because they wanted it. It's the same thing in the resource sector. Once this really gets going, I fully expect, and I know it sounds almost impossible now, to especially people that aren't invested in this sector, that we will see a run to gold probably like we've never seen before. And the reason for that is the availability of alternative media like you that put out information and the internet. You can buy gold off the internet. You couldn't do that in 1979. You had to physically walk into a coin dealer somewhere if your town was big enough to have one, and then either put a check on the table and wait for it to clear and come pick up your product, or carry currency and put it on the table and carry your product out. That was basically the only way you could do it. I mean, you could, of course, go to a broker and, wire money and have it stored for you, that type of thing. But very few people were at that level. Almost everybody was more at the cash and carry level. That's not true anymore. I mean, you can buy silver or gold basically anywhere in the world with your phone. And so when the run starts, the availability that's still there will shrink up very fast if you double or triple the amount of people invested or wanting to invest in it. And, I don't know what Rick said further than that. My take is that it could easily triple, but it's more likely to quadruple or centuple. I mean, I think the run to gold, once it starts, and this will carry over into silver and the resource sector and the mining stocks and the oil sector and the energy stocks and the commodities in general, foods as well. Once that run begins, I don't think it'll be a triple. I think it'll be far more than that. And you're going to see what we saw, what I witnessed, what I went through in the late 70s and watching, soybeans go through the roof and, different commodities, of course, especially silver. Silver led the charge back then. And it's the weakest sister of all the commodities now for a variety of reasons, which we've discussed on your program before. But that doesn't mean it's over. In fact, I think it's far from over because there aren't many places you can go in today's world that keep your anonymity. I mean, there's hard currency, meaning, physical pieces of paper in whatever nation state you're in that uses them, metal coins, and most cryptos, for the most part, are not that anonymous. Plus, you've got to have a digital-based system to use them, which I'm not against. I own some, but there's nothing like cash and carry, and there's really nothing like real metal in times of uncertainty, which we are becoming, in my view, more uncertain by the minute. So probably exaggerated that, but more uncertain by the day.
Definitely. It does seem like there is just so much going on nowadays. And one of the things I was going to ask you about is, what is the sentiment like in the silver market, and especially those really into silver who just, attended the Silver Symposium? You were there. What was the feeling there when you were there?
The feeling there was actually moderately optimistic. I mean, a lot of people that saw the value in the underlying equity market, the silver mining shares, gold mining shares, resource stocks, could see these things were at bargain levels. It was nothing like when, gold and silver were rocking and rolling. I've lived those days. I think I met you when you were 16 or so, and I think silver had been on a pretty good run at that point. But regardless, overall, it was positive. But I want to go back because I thought you were going to ask me a different question. So that was a sentiment Silver Symposium, cautiously optimistic, long-term bullish. A lot of staid people just that, look, it's going to happen. I'm here for the long run. However, when you said, what's the sentiment like, I thought I would quote one of my members, premium members, that wrote me a email, and it went like this. The subject was silver, the investment from hell. And he went on to say, I'm a silver investor like you, and I feel like I've just can't take it anymore. I watched, all these FANG stocks go up, what the stock market's doing, these cryptocurrencies, even gold isn't performing. I'm just really, really tired of this whole thing, And they didn't really ask for me to respond. I think I, gave them a response, but, and yeah, I cannot disagree with them. I mean, my only, defense has been the same throughout. And that is, if you read what I put in the public domain for years, decades, was, my 10 rules or the 10 rules of silver investing. And, rule 10 is too much of a good thing is too much. You got to have the right amount. And the right amount for most people is a modest amount. And that's usually, if people do that, then they're not that upset with the market, silver, me, some commentator or whatever, because they've taken a position. And there's others that have very strong positions, but have a different attitude about it. And it's more long run or leaving a legacy for their family, perhaps. And that is just to basically, dollar cost average throughout their lives. I just had some pretty expensive repair work done here at the homestead. And the guy was a silver buff. I didn't know it, started talking. So I paid him in silver, and he very, very gladly accepted it. And I did get a premium, but not much, because I'm really not a dealer. But he had an attitude of being overweighted silver, but happy to do so. So takes all kinds, but for most people, if you want to rest well at night, you should have some, but you don't need to overdo it. Sometimes there's the right amount, and the right amount for most people is a modest amount.
Definitely. I think that's so key that you mentioned, like it lets you rest well at night, is that's the first reason to own precious metals. And we've talked about this before, but it's worth reemphasizing that it's not about getting rich, right? And people, you said that the sentiment is so terrible for some people right now because, we look back at the beginning of the year when silver was pushing 30 and now it's 23 or whatever. It definitely has been a bit of a rough rest of the year. But at the end of the day, it's not about making a whole lot of money. It's about putting your funds in somewhere that is real money, right? That has lasted for 6,000 years. And regardless of what happens in the financial system, will still be there.
Elijah, I just want to add one thing, please. I started the report on the internet roughly 20 years ago, a little longer. But Matt Watson, who's a good analyst in my view, and he thinks, he's quoted the USGS. So I've used this quoting the United States Geological Service that will be out of silver in 20 years. So that's not true. We're never really out of silver. But what they're saying is economically mined silver at today's price, we are out. In other words, if the price remained at, well, rounded up to $30 an ounce, you couldn't open a new mine 20 years hence. Of course, when the price changes, then what's not of a viable mine can become a viable mine. But all that aside, think about it. We've had this money for 4,500, 5,000 years, and now we're getting to a point in history where in 20 years, it's going to be questionable, unless the price really accelerates, what the amount of silver available economically will be. So, someone out there that was, whatever age, doesn't matter, started, talking about silver for a longer term, you're in a sweet spot in my view. In other words, if you bought at 30 and you've got, 5 or 10 year time horizon, I really don't see how you can't do anything but come out good. You've got a longer time horizon. If you're, in your 20s or 30s or whatever age, it doesn't matter. But I mean, if you're at that younger age and look at it as a legacy investment to put your kids through college or start a business or, whatever, I think it's a real opportunity, especially if you've got that kind of a time horizon. So I think the silver story is far from over. I know it's been a long and dull one for the last several years. I also know what it was like from 2000 to 2011 when gold had an 11-year bull market. And I remember walking into those halls at investment conferences when I could barely get down the aisleway. It was so packed. And there was enthusiasm of like a rock concert or something. So I've seen both sides. And I think we're going to go back up into the happy days are here again. It won't be overnight, but I think we're going to start very soon.
All right. And the website is themorganreport.com. David, would you like to share with the viewers a little bit about that and also any last thoughts you'd like to add?
Sure. Just go to the morganreport.com and pull down the blog feature. That's got almost everything. If you want to know what I'm thinking on a daily basis, go to my Twitter feed. It's at SilverGuru22. I think you just type in my name and silver on Twitter. It'll pop it up. And I've been putting a lot out there on what's going on in the crypto world because this regulation that I've predicted so many years ago is coming to the fore right here and right now. It looks like the regulators are going to be doing their thing on the crypto market participants and even the exchanges that are basically what people have to go through to participate in that market. So be aware of that and other, macroeconomic things, and of course articles and writings and videos on the markets generally. And I focus a lot, obviously, on the precious metals, but there's a lot there outside of the precious metals that I think are very important in today's ever-changing world.
All right. Once again, David, thank you so much for your time, and God bless.
And God bless you, Elijah. Thanks for having me.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.